Welcome to Beyond Just Money. My name is Samta, and today with me I have the Director of Research of 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Pty Limited, Ms. 𝐊𝐚𝐥𝐤𝐺 Chaudhary, as a guest speaker. Welcome, 𝐊𝐚𝐥, to Beyond Just Money. Today we are going to discuss the rising house prices in Australia and what is driving the surge in prices. The Reserve Bank of Australia is expecting house prices to surge by 30% during the next 3 years. 𝐊𝐚𝐥, can you please take us through what is driving the surge in the house prices?
Hi Samta, good to talk about house prices today. Now, if you look at the scenario in the real estate and property market, appetite for investors is really changing. The e-commerce and many industrial movements are driving property per se. And if we expect the e-commerce to go up, we also expect that there is a demand which might come in the property side of things. Not just the real estate or property numbers which we are looking at, but we are also looking at the stocks which are related to the zone. So property stocks, they have been estimated to give a good return over the next 2 to 3 years. So that's how the things are panning out. And if I talk about 2020, we have seen, despite COVID recession, national house prices, they rose by about 3.7% in 2020, with values in regional areas soaring by about 7%. Now, if you look at the property values on beach havens like Byron Bay, Noosa, they have surged by 16% in 1 year. And witnessing this rise in house prices, we of course see that coming in. It is directly or in a way linked to the interest rate environment. We are right now in a low interest rate environment. In November 2020, we saw that the Reserve Bank of Australia chopped off the interest rates to a record low of 0.1%. Now also, 3 out of the 4 major banks were offering fixed home loan rates at less than 2%. Now, this is the reason the RBI has predicted, a 30% leap in house prices over the next 3 years. This assumption is largely based on the modeling that shows the effects of 1 percentage point cut to the cash rate. Now, between October 2019 and November 2020, the RBI cut interest rates by about 0.9%. Now, RBI is engaged in radical quantitative easing, wherein, it is buying government bonds to lift the economy. And this, in a way, will have impact on the whole scenario with regards to property. In the month of December, we also saw that, interest rates were kept on hold, and RBA Governor Philip Lowe reiterated that the cash rate would remain as it is for some more time. So Lowe had said that, given the outlook, the board would not be able to raise the cash rate for at least 3 years from now. So that's the scenario, Samta, we are in right now.
Right, 𝐊𝐚𝐥. And according to you, which areas are witnessing the highest surge in property prices, 𝐊𝐚𝐥?
So if we look, at a granular level, Samta, the regional areas located by the coast are in hot demand as of now. The average house price at Austin Muir and then, in Wollongong's north area, that saw a surge by around 14.9% to $1.438 million in 2020. And this data is coming from CoreLogic analysis of all the houses in the suburb, not just, the ones that got sold. Now, when it comes to Byron Bay, located on the far north coast of New South Wales, the figures are even better, with midpoint house rates rising by about 16% to $1.9 million. Noosa was also a hotspot, with its price, soaring up by 17% to around $1.45 million. The value of the apartments also gained momentum, as the average price range jumped by 16% to touch, around $632K. Now, Sydney, Australia's biggest property market, it has seen a 4% annual rise in house prices in 2020, despite 5 direct months of decline from May to September, with average values now sitting around $0.015 million. Darwin saw a rise of about 11.9% in values, while in Hobart we have seen average prices rose by about 7.7%. Then Adelaide values soared by 5.9%. So only prices in Melbourne seemed to be moving downwards in 2020. Now here the median house prices fell by about 2% to reach a figure of around $800K. Now That's the kind of regional numbers that we have seen in the past.
So regional areas by the coast are certainly in vogue here now. As per the December home value data, combined recent dwelling market, it rose to 6.9% in value in a year. Now, this growth rate is more than thrice the rate of the combined capital cities if we talk. So what are your views on the same?
Right, Samta, but the more interesting fact is the homecoming aspect that some areas have shown in the longer term. This can be experienced by looking at the average annual compounding growth rate during the last 10 years. Now, in NSW, 10-year annualized growth rates were about 5% across Illawarra, then 4.5% across both the Newcastle Lake and Macquarie region and the Southern Highlands and Shoalhaven region. Now in Victoria, Geelong has a long run annualized growth rate of 4% as per we have from the data. Long-term growth rates aligned more closely with average increases across the capital city sub-markets across Queensland, the Gold Coast and the Sunshine Coast. But further to this, the 10-year annualized growth rates have surpassed the increases in every other capital city and regional sub-market across the Sunshine State. So that is where we stand when we come to the regional areas per se by the coast.
Right, Hina. So on that note, thank you for sharing your insights with our listeners. And to our listeners who want to listen to this podcast again, please log on to our website, which is 𝐊𝐴LKindMedia.com, and please subscribe to our YouTube channel. And we will see you soon with yet another insightful episode of Beyond Just Money. Till then, as we say, stay apprised and invest wise with 𝐊𝐴LKInd, your best guide.